Hey, what's up guys? It's Money with Mikey, and today we're going to be talking about credit scores and credit. Now, you probably clicked on this video, maybe because you don't know what credit is, maybe because you have bad credit, or maybe it's because you want to learn more about how credit and credit scores work. Now, if you ask Google, Google's going to tell you a credit score is a number between 300 to 850 that tells a consumer's creditworthiness. The higher the score, the better a borrower looks to a potential lender. A credit score is based on credit history, number of open accounts, total levels of debt, and repayment history, and other factors. Now, if you're like most people, you don't know what any of that means. Well, we're going to jump in and we're going to tell you what that stuff means. Before we jump into that stuff, you might be wondering, why does credit even matter? Well, unless you want to live in your parents' basement forever and maybe you want to buy a house one day or maybe you want to buy a car one day, credit is going to matter because banks do care about that if you want to take out a big loan for a lot of money. Bank gives someone to know how loanable they are. Basically, let's say you gave $25. Well, you want to make sure they're going to give you that $5 back. If there's history of where they haven't paid you back, well, then there's probably a good chance they aren't going to pay you back. A bank looks at it the same way. If a bank gives you money to buy a car, they are going to want to expect that money back. And if you have history of not doing that, well, then they're not really probably going to want to loan you. The biggest thing banks care about is paying on time. This is going to account for about 35% of your score, the biggest one on the list. So you want to make sure that you're paying all of your bills on time. The easiest way to do this is by setting things on auto pay. Like if you have a phone bill, set it on auto pay. Just set it and forget it. Link it to your card and make sure it gets paid every single month, month after month. This is also going to help you maintain, repair, or build your score. Now, the next biggest thing on this list is credit card utilization. So banks do this weird thing where they give you a high limit, but they don't actually want you to spend that much. They actually only want you to spend 20% or less of your total credit line. So that means if you have a $10,000 limit, they actually don't want you to spend more than $2,000 in one billing cycle. Next biggest thing on this list is length of credit history. Now, this is going to account for about 15% of your total score. Now, for a lot of people, this is a hard one, especially if you're just starting out trying to build your credit, because there's not much you can do other than open a card and just wait, honestly. But there is one thing that really helps, especially if you have parents who understand. So there's this thing called authorized user. What you can do is you can have your parents add you to their credit card. And I know that sounds crazy, but what you can do is actually, they'll send a card out to you and then just have your parents, they'll just cut it up. You don't actually even need to use it at all. Just being on their credit card helps you because it takes their score and averages it with your score, which is very low, which is going to push your score up high. Next one on this list is total lines of credit. This is going to account for about 10% of your entire score. So what this means is that banks want to know that even though you have 2 to 3 credit cards, maybe you have a mortgage in your house, maybe you have a car loan, they want to know that you can be responsible and pay all these different things, even though it's not just in one. They want to know that you can pay all these things and you can pay them on time as well. Next and final thing we're going to cover on this list is total inquiries on your account. So what this means is that the banks want to see and make sure that you're not just trying to take as much money as possible and run away. So there's some things you can do to make sure this stays low. Like if you're going to try to buy a house, maybe not try to get a loan for a car as well at the same time. Maybe try to do that after. Because every time you ask to get a loan out for something, a car or a house or whatever, they're going to run your credit and they're going to make sure that you are a worthy borrower. Now, doing this is actually going to put a hard inquiry on your credit account. So doing this, you're going to look sketchy to the banks who want to loan you this money. You don't want to do that. All right, guys, that brings us to the end of the video. Thank you for watching. If you liked, please like, comment, subscribe. I'll be sure to be in the comments answering any questions you might have. And if you liked it and you think somebody else might enjoy this or be beneficial to them, please share this with your friends. And anyways, this has been Money with Mikey.